It's Thursday, March 18th, 2021. And today we have a fintech focus show for you, talking about KOHO and Brim reload their cards with new rounds. Revolut finds Canada revolting. Lightspeed adds Vend to their cart. Plus, 2 new funds are ready to deploy capital in early stage and scaling startups in Canada and beyond. Let's get started. Are you ready, Alex?
Yes, I am.
Oh, look at the enthusiasm this week. I love it.
It's gray outside, so you have to bring the energy.
Gotta bring the energy. First up, KOHO and Brim reload their cards with new rounds. Alex, it seems like every week Canadian fintechs are raising large rounds. Can we start with KOHO?
Yeah, let's start with KOHO. They raised $70 million. It's a Series C. Jason, you must know KOHO well. Why don't you explain what KOHO does?
Yeah, I know KOHO well. I'm a member. Are you a member of KOHO, Alex?
No, I'm not. Were you doing competitive intelligence for Wealthsimple?
I'm a Gildan cotton candy kind of guy. I think you're more of like a blueberried caviar, or maybe a sun-kissed skinny dip. Those are the color cards that you can get when you become a KOHO member. KOHO is a prepaid Visa card, and it's a prepaid Visa card that lets you have all sorts of awesome offers, but also analytics on your spending. And it's available, I'm pretty sure, across Canada. And so tell me, what else do we know about the round, Alex?
$70 million is the headline, but once again, this is poor reporting by Canadian journalists. It's actually 50 million equity and 20 million venture debt. So it's, as far as I'm concerned, it's a 50 million round. Apparently some money was taken off the table above that $70 million. That hasn't been disclosed. Rumor has 300 million valuation. New investor led around TTV Capital, Drive Capital and Portage also participated.
Mm-hmm.
So, decent sized round, valuations not up there in the unicorn status like other neo challenging banks across the world. They say they're going to use the money for it. They say they're going to use it to grow customers and get more share of wallet.
That's awesome. And so when you say some people took money off the table there, that was how much? Do we know how much of that round it was?
No, and that hasn't been disclosed. It was what it's been said is above. It's some money above that $70 million.
Got it. Okay. Just trying to make sure that you know who those new LPs are going to be in the fund, Alex. That's important.
Our new angels. Well,
that's right.
Yeah. What's interesting about KOHO, it's large money raised, but in my opinion, the numbers aren't that great.
Tell me, what numbers are you looking at?
So the numbers they disclose are 350,000 users. So I don't know how many of those are active, and that's doubled since 2019. So growth is good, but then they say 2 billion transaction volumes per year. That's a lot of money. But when you do some simple math, that's $5,000, about $6,000 of transactions per user per year. And then I do some backwards math here. So if most of their money is coming from some fees, some commission on sales, I don't see a customer being worth more than $100. And they're not using their own stack. They're using whose stack is it? People's Trust, right? So they have to be sharing some money there. So it means each user is worth about $50 a year to them. It's my back of the envelope guess.
So what do you think? Do they use some of this new capital to try to cross-sell new products to the customers, try to drive up that ARPU, or what do you think they're going to do with this new round?
They have to, I think. I think you have to get, to me, I don't know what the unit economics are, but if you're making $50 per user for a financial service product, gross margin, you're looking at a 5 to 6 year payback period is my guess at best. So you have to get more, either they have to be using that debit card as their primary source of banking, or they have to be adding additional services.
Right. Or maybe both.
Ideally both, right? They want to have 1 million users doing like $1 trillion of transactions a year on their cards.
Awesome. So we also are talking about another card company that's raising money. We want to talk about Brim Financial for a second. Alex, if you could have anybody on this show to talk about Brim Financial, who would you want to come up and talk about that with us?
I would love to have Rasha, the founder.
Well, can you believe it? We got a special guest today. Let's welcome to the TechTO Quick Take stage, Rasha. Hey, Rasha, how you doing?
Great. How are you guys?
Glad you can make it.
Hey, Alex. Yeah, that was a bit last minute, but yeah, we got it done.
Yeah. So
talking to you guys.
Yeah, we miss you. Tell us what Brim does, because I think, like, just before you go, I think most people don't understand what Brim is, and I think you're one of the most underappreciated fintech plays in the country. So first, tell us what Brim does.
Yeah, I'm gonna say globally, Alex. But
okay. I love that, because we have to be global here. We don't want to be Canadian only.
I think there's tremendous interest now, and we're no longer under the radar. So interest is pouring in both on the commercial side and on the investment side. As the Series B was developing, our commercial partnership pipeline and implementations, there's going to be many announcements now in the market, one on the heel of the others, that were obviously strengthening Brim and our impact and our share of market and our differentiated technology really globally. So yeah, a bit about Brim and what happened really through 2020 and the transformation that we're all living. The new environment is transformative, and it's true for decades to come. It changes the way we work, we live, we communicate, we connect, we do anything really. Now you're getting your bagel delivered. You're not even going down the street to pick it up anymore. It's incredible.
So the world's changed, and what role does Brim play in this? Like, for the people that don't know who Brim is, how do you describe yourself?
So basically, Brim delivers groundbreaking, innovative financial products and a full end-to-end digital platform to our partners in less than 8 weeks, fully integrated in their environments, in their branch banking, digital banking, all end-to-end, delighting their customers. And the truth is that there's massive demand by large businesses, financial institutions, credit unions, alike globally, because they can no longer wait. There's an acceleration in, the shifting consumer expectations and the need, therefore, to respond and evolve accordingly and provide an exceptional digital environment where you can do your banking, commerce, fully integrated, a robust platform, that responds to the minutia of the need of every single customer on a fully digital, anticipates them on a fully digital,
Can I interrupt? I'd like to get this a bit more concrete, because what I view, I think the high level, what you're doing is you've created a new digital infrastructure for banking and transactions. Is that correct?
Yes, and cards and business cards and commerce and e-commerce and loyalty all integrated in one. And really, that's what you need to do. It can't be, a one piece of the solution, because therefore your customer is going to experience it as piecemeal. And it's not going to be an ecosystem, and it's not going to be an environment, and there's not going to be stickiness.
So can we say what life was before Brim and what life is now? Because so before Brim, your loyalty program was one stack of technology, your card was a different stack, and what you do is bring it all together and make it flexible.
Exactly. And, and banking and integration with accounting, both your business and your consumer cards, all digital banking, you're going to see many products roll out on the Brim, ecosystem and platform. This is all fully integrated, both for merchants on the one side, for our partners, and for the customers eventually, ours and our partners that are using it. It's really an all-in-one, and you're going to see a lot of evolution in how we integrate commerce, which today is, state of the art globally. Our, rewards and loyalty platform is live at every single merchant worldwide. Any merchant in the world can be part of this ecosystem in less than 3 minutes.
That's awesome.
All
so you raised 25 million. So first of all, I think it was Desjardins, Epic Ventures. So why these partners?
Well, I think that Desjardins understands the need to work with a broad swath of the market in credit unions, mid-sized banks, etc., and they've done that. It's in their DNA. And they understand the huge opportunity that's in the market to lift, a whole section. Even large Canadian financial institutions that are mammoth, need a huge lift to their fully integrated digital experience. It's digital, all right, but it doesn't respond to our digital needs and a fully integrated life.
So the way I look at it is you go in that old house in Toronto and it can be renovated. And there's some that just put new painting on the walls. And that's what most digital products are today. What you said is, hey, we've got we're going to give you the new beams. We're going right back to the studs, and you're giving us a new ability to do cool stuff with the latest technology.
You got it, Alex. That's exactly right. It's completely from the ground up. And not only that, now you don't need, 3, 5, 8 years to roll this out. This is done in 8 weeks. In 8 weeks, you're at the forefront of the new digital experience.
So I'm going to ask you some questions, because I understand what you're doing, understand the money you've raised. What can you tell us about where you're at right now? I see your cards. What partners do you have live? What can you share with us that,
So I
about
think, in a couple of weeks, Alex, maybe we'll touch base again. We're going to be announcing in the market a large scale rollout with a Canadian mid-sized bank, away from Desjardins, and Epic and etc. And that's, I think the tip of the iceberg to all of the implementations and the rollouts that we have in store. You're going to see more products roll out. Here, let's announce it here. Our business card is going to be coming out, in soon, shortly. All of this is integrated on that same ecosystem. So now this massive, minute, passionate and extreme, basically focus from a consumer side is going to be translated on the business side as well. So extremely robust environment and ecosystem that, Brim is building.
Can I take it to a higher level? One thing we like to do in a quick takes is, what does this mean for founders or early stage, tech enthusiasts in Canada? What does your financing mean? What is what you're doing meaning for the whole ecosystem? What should they take away?
When it's that transformative, it takes a bit of time to register. So, as you said, we were for a long time, under wraps or not very understood. It takes a lot of, of examples to bring it to life. But we're there. You can do it out of a Canadian, infrastructure if you really go back to not a veneer, but really rebuilding what the global ecosystem really needs. At the end of the day, global investors respond and see it. It's great in our Epic Ventures that co-led, so we have US Canadian co-led round, and we have in our pipeline Canadian, US, and now soon to be global implementations.
This is exciting. Thank you so much for coming on. Jason, do you have any more questions for Rasha before we let her go?
Thanks for joining us, Rasha. That was great.
Thanks, Jason.
Cool.
All right, Alex, where else do you think we can read about what's happening in the Canadian tech ecosystem and stay up to date on the kind of news that we're sharing today?
This sounds like a loaded question, but it's our newsletter?
It's our newsletter. So if you love what you're hearing on TechTO Quick Takes, if you like keeping up to date on the people like Rasha and companies like Brim that are shaping the Canadian tech ecosystem, you need to subscribe to the TechTO newsletter. Alex, you send it Monday, Wednesday, and Friday. What was your favorite part of yesterday's issue, Alex?
Oh, it had to be the spotlight on Perpetua. They're like, again, another company that people understand how massive and how impactful they are. So if I was looking for a job, I'd actually read that highlight and apply. And if you want, I can give you Adam Epstein's email to just make your case.
Oh, yeah. Let's put that in the podcast for everyone to get at whenever they want.
Before we go to the next section, Jason, because we really need to do our actual takes here.
Sure.
Do you have any takes on these two announcements?
Good point. Yeah, I do have a take, and I think it's actually a pretty disappointing take, and it's disappointing, I think, in that it's taken this long to have challenger fintech companies get the kind of capital they need to go after the opportunity in Canada. Canadians are very poorly served in this space, and I think any innovation has got to be welcome. We saw, fintech seem to be hot a few years ago, but really the money is coming in now. And now is the time that people are getting armed and are going to be able to go and really change Canadians' habits permanently, I hope. What do you think, Alex?
I agree. It seems like this might be the end of the oligopoly. I have another take. We talk about the challenger banks, the challenger robo-advisors, and the consumer-focused fintechs. They're exciting, but they're Canada-only plays, and I think they'll be big. But we don't talk about Sensible. We don't talk about Brim. We don't talk about the other B2B fintech companies, which are a bit, to survive, they have to compete globally and they have to be a bit more unique. And I think there's a slow burn that could create the mammoth outcomes we want in this ecosystem. Like, look, Wealthsimple, KOHO, they're going to be big, but will they be the next Stripe? I think I'd love to see it worth $100 billion. I'm sure you would too, Jason. But I think you're tapped into a local market, and they can't. And despite getting all the attention because we use it, I think we don't pay enough attention to what's going on the B2B side.
I love it, and what a great segue to our next topic. Revolut finds Canada revolting. Alex, this is by far the best headline we have ever written. Tell me about the Revolut revolution.
Well, Revolut is a UK-based challenger bank that claims to be building the world's first truly global financial super app. So the idea was they go and provide like lots of our challenger banks, they provide the basic banking, but they go beyond that. So they provide a debit cards, currency exchange, stock trading, peer-to-peer payments, cryptocurrency exchange. They want to be the only app you ever had to use. They emerged in the UK, and they came to Canada, and apparently didn't work out.
Okay, what do you mean it didn't work out? What's going on here?
They did a beta program, and they've sent an email to all their users saying, "Hey, we're gonzo. March 15th, 2021. Sorry, that's you can no longer use us." Not sure how large they were here, and it's quite interesting because they have 15 million customers in 30 other countries, and I think this is the first time they pulled out of a country. So
they've got global ambitions. They want to be on every country on earth, and here they are pulling out of Canada.
Yeah,
what does that mean, Alex?
It goes back to what you said about Canadian regulations and the takeaway of the last one. I think it's very hard to operate here. The Canadian regulatory authorities and the oligopoly and Canadian conservatism makes it hard to break in. And it took a while for, I think, our challenger banks to get some mind share. And it's worth it for Neobank. It's worth it for Wealthsimple. It's worth it for KOHO because it's their only market. And I think you got someone like Revolut saying, hey, we're in 30 different countries. We're attacking these countries. Canada's a relatively small market. Pain in the ass from a regulatory perspective, a pain in the ass from getting anything, getting mind share, people trying us out. Why bother? Let's leave.
So, we talk about the Canadian financial regulation landscape often on the show, probably more than any other tech show really should. Do you think we sort of like rank globally? Like all these countries are happening here. Is this like one of the worst places to go after if you're a fintech challenger right now?
If you're a consumer financial institution, probably it's low for your market entry and expansion. Like this goes back to a study I think, I don't know if you were on this one at McKinsey, like I guess 12 years ago, during the financial crisis, everyone was like cheering on that we weren't imploding. We weren't imploding because an oligopoly had no desire to take risk and was making huge profits at the consumer's expenses throughout their life. So, there's a reason there's an oligopoly. There's a reason that there's huge profits, and it makes it hard for anyone to come into this market. So we have very rich consumers. It should be very profitable, but it's not easy to break into the market. So if you can go break in the United States, UK, Brazil, or Canada, the risk versus reward or effort versus reward is probably not there for most global fintechs.
Why is this news in particular, Revolut, a global company leaving Canada, interesting to the TechTO community?
Well, it shows that there's money to be made in being a Canadian-focused consumer bank or consumer challenger. Like we said, you've seen Wealthsimple pull back and focus on Canada, but they're doing well. KOHO is raising money. Neobank out of the prairies is doing well. I think it also says there's a long-term worry here about these being global competitors. When you compete and win in a heavily regulated market, you get your face slapped when you go out of the market and try to compete globally. So I think it's creating local domestic champions that will never be global players. So if I'm an entrepreneur or someone that wants to join a rocket ship company, it makes me think about what are the dynamics and the potential outcomes and how I want to compete. So I think this is also an example where the regulatory and business environment have a big impact on your outcomes. So it also, and it may be, if you're doing travel or media and other heavy regulated industries, you might want to, as a founder, it makes sense to start up and try to figure out what are the unnatural impediments or opportunities that give you an edge in your local market.
And Alex, if you wanted to commiserate with other early stage founders about the state of consumer fintech regulation in Canada, or look for those edges that you talked about and how you can succeed and win here, what should you do?
You should go to Jason's house.
Oh man, that's a terrible place to go. A great place to go is the TechTO Insiders membership program, where you can meet other entrepreneurs, investors, and founders. Alex and I are there every day answering questions, making introductions, commiserating over the state of fintech, and helping to grow the community. Alex, any new members joined this week that you're particularly excited about?
Oh God, you're putting me on the spot. I've spoken to quite a few or slacked quite a few. I can't remember anyone in particular I want to highlight because I don't want to embarrass them. Is there anyone that sticks out on your mind?
Yeah, there's a couple really interesting ones. A recent member that joined that I've been chatting with a lot is Kyle out in Victoria, BC. He is building CheerBot. Have you heard of this, Alex?
No, I haven't.
It's really cool. It's this piece of hardware that live stream performers wear. and people can tip them through the software, and it lights up and glows and shows their message when they are performing. Maybe we need to get you a cheerbot, Alex. What do you think?
Only if you do one, but you have to be on your going around the city of Toronto with your hoverboard.
Amazing. All right. Next up, Lightspeed adds Vend to their cart. All right, Alex, for people who, I can't believe I have to do this, but don't know Lightspeed, the $10 billion Montreal-based tech company, give us the rundown. Who's Lightspeed again?
It's funny. I think we speak about as much about Lightspeed as Shopify. So hopefully people are starting to know who Lightspeed is. So Lightspeed is Montreal-based POS system. They went public, I think, a year and a half ago or 2 years ago.
Describe what POS is, though, Alex.
So, point of sale. So if you go to a restaurant, if you go to a retailer and you pay for your stuff, that's a POS system. They're much more than that. They integrate and back end into your inventory and stuff like that. But it started off as, hey, you go to a restaurant, they need a way to accept money, and then they've started providing more and more tools for those retailers or restaurants. They've been busy organically expanding their products, but also they've been busy acquiring. This is their third acquisition in 6 months.
And are all those acquisitions like similar? Is there a strategy to this acquisitory strategy here?
Yeah, well, it's like being a global company. They're buying into new geographies and they're buying new complementary products. So increasing distribution and then making their product more robust and get more share of wallet. So it's a great strategy.
And is this like a pandemic opportunity? Like, is this sector being hurt from the lack of retail or restaurants happening? And is this like, are they buying up sort of these assets opportunistically? I
don't know. Look, Vend had lots of integration to e-commerce as well for the POS. So I imagine Vend was doing well. And it's Asia Pacific based, which if you look at your social media, Australia and Taiwan and Korea have all been back to normal life for 6 months. So if anything, I imagine the Vend customer base has been doing better than the North American strong base. So I think this is more someone has a public company with a strong currency given current public market valuations and is buying up revenue and probably having them incremental earnings right away, right? Like, look, 350 million USD sounds like a lot, but it's less than it's about 3% of Lightspeed's market cap.
Right. Okay, so this is going to be the last time on Quick Takes that we talk about who Lightspeed is, but I do have to ask, who is Vend?
Vend is, they call themselves a retail management software company. So instead of a POS, they're a bit more, they have POS systems, but they provide more tools and tricks to help retailers manage their business. Relatively small, like they're like $34 million of revenue, gross transaction volume of 7 billion, just shows you how 2 billion is not that impressive. Going back to KOHO, Daniel's not going to talk to me again. So what they do is they allow merchants to generate reports on sales, inventory, customer behavior. They integrate with Shopify and WooCommerce to help retailers sell online. And they were based in New Zealand and very strong in the Asia Pacific area.
Got it. So is this an opportunity both to sell Vend software to existing Lightspeed customers and also sell Lightspeed to existing Vend customers?
Exactly. And it basically doubles Lightspeed's presence in Asia Pacific, and it brings their customer base up to 135,000 customers. So,
and Lightspeed's publicly traded. What does the market think of this deal, Alex?
Can't remember. I think it popped up right after a few percent, but to me, short-term movements don't mean much.
Oh, you're a long-term thinker. I love that. So thinking long-term, as the TechTO community does, why are you excited about this news? Why are you excited about the Lightspeed acquisition of Vend?
Well, I think just like the other big mammoth publicly traded Canadian tech darling, Shopify, it shows that Canadian companies can be global beaters and can be aggressive. And I actually think Lightspeed's actually being much more aggressive than Shopify because they're going out and acquiring customers and acquiring products to enhance themselves, and they're tucking them in. And it shows also the advantage of being public. Like, you're seeing more tech companies go public, and it used to be, hey, the private market's where it's at. One of the things that's always been misunderstood, I think, by lots of founders is if you have a publicly traded company, you have a share that's liquid and it gives you currency to acquire companies on relatively cheap if you're doing well. So it's showing global ambitions, which I love to all other founders to be. Let's be more global. Let's build world beaters. It shows the value of being public, and it shows there's also a hidden story here, which we'll get into now. But there's a story of the Canadian ecosystem backing a company that and making sure they get they have the time to grow, because at one point they were backed by US VCs that wanted to potentially sell Lightspeed to other companies, other privately traded companies. And instead, US VC stepped up, said, we'll buy you out, and they took it public. So long-term thinking wins.
Love it. Hey, Alex, how else can we get more people in the Canadian tech ecosystem to think long-term?
Good question. By coming to Next in Tech?
Oh, close. I like that. I think Next in Tech is a great one. So tell us a little bit more about Next in Tech and the next episode of it that we're featuring here.
So Next in Tech is our new live stream mini-series hosted by Swish. And the idea here is, and lots of what the public pays attention to are Shopify and Lightspeed. And even when you get the founders in that stage to go back and tell their stories, they tend to forget what it was like in that moment. So the Next in Tech is featuring a bunch of founders that are early stage, currently building their business, and sharing their trials and tribulations and tips on how to build a company. The next one has Khushbu, who's we all I know and love. She's building a prop tech company, and I'm not sure what they're going to talk about, but I guess they're going to talk about acquiring their first customer.
I love it.
It'll be interesting. She has a marketplace. I wonder how she'll define that first customer.
We also have coming up, Alex, founders and funding. And as you know, this is the show where we feature a venture partner and one of their portfolio CEOs and talk about how the deal came together and how it's going today. The next episode is on Friday. That's tomorrow. What's going to happen in this episode, Alex?
We're going to have Shruti Van Dyke Gandhi, who is one of the brightest people I've ever met. She knows machine learning and AI. She's a Columbia professor. She's also a partner at RA Ventures. She's going to have one of the companies she invested in, a company called Capsule. It's a video company, and they're going to talk about the journey together and the unvarnished truth of what it's like starting a company, raising money, and working with a VC.
Yeah, no varnish at TechTO. And then, Alex, this is awesome. We're bringing back an insider favorite series, Perfecting the Pitch. Every episode, a new Canadian founder is going to pitch you on their startup. And it is not about necessarily closing the deal, but it is about getting real helpful feedback and opinions on their pitch so they can get it into top ship shape as they bring it out to investors. Tell me a little bit more about this episode coming out on March 23rd.
Well, we're returning from a long period of not having a Perfecting the Pitch, and we're going to get someone that's pivoted during COVID and has seen their growth skyrocket. But they're in a busy, crowded space. So I'm looking forward to seeing what Majdi has to say about Zip Lunch.
Awesome. And then we've got the primetime events back, TechTO Together, where we showcase the best of the world to the Canadian audience and also spotlight some emerging tech leaders. Who do we have coming up on April 12th here, Alex?
Chris from Wonder School. Wonder School is a Valley-based company that if you're a parent, you've probably heard of. They're basically enabling people to start daycares. They're one of the bright companies out of the Valley. And then Nason from Rapbook, who we talked about last week. Rapbook is changing how the production industry works, like film and TV production. And they just raised a large A round, and they're going to tell us their story so far. So Wonder School's a bit later stage, touching how people live and work. Rapbook is making sure that we can get entertainment on Netflix and Disney Plus again soon.
Unreal. Wow. The dream is alive. We talk about them one week. You get to meet them the next week and learn from them and grow together. Super excited about that. All right. We got a couple more headlines I want to get through here in the next 5 minutes, Alex. The first one, Inovia Capital raises $450 million USD for its growth fund. What is happening here, Alex?
So Inovia 2 years ago introduced their first growth fund saying, hey, we want to be able to back later stage Canadian companies or global companies. They raised the fund. I think $400 million was their first one. They went to market early, got $450 million. They've changed their strategy a bit. They're going to invest in 10 to 12 companies. They're going to write primary investments, secondary investments, and basically help finance later stage companies. And one of those companies I think out of fund one was Lightspeed. So they had success there, and they're going to try to duplicate it.
Awesome. Have they made any investments out of this fund already?
The first investment is Swift. It's actually a US-based online fitness platform. I've actually looked into it. So it's like you can play games, like you can cycle and escape zombies. So there's one end you have Peloton, the other hand you have Swift. So I think Peloton's more like the traditional spin classes. Zwift is more like, let's use virtual gaming to get exercise.
Yeah, don't worry. I spend a lot of time with my father-in-law, who's a Zwift expert. I know all about it.
Do you have Zwift?
I'm not a Zwifter. But I know plenty of Zwifts. And I also see people sharing their Zwift rides on Strava. I do Strava, and you can share.
Did they Twitch their Zwift rides?
I don't think they Twitch them. They just report on them. Alex, we need to get you working out a little bit more. We can introduce you to this whole world of, fitness tech. I think you're an investor in one, aren't you?
Yeah, a small company called Fight Camp.
There you go. Cool. I also want to make sure we have time for this. Greensoil PropTech Ventures has a first close of $50 million. Tell us about what that means, Alex.
Well, first of all, it's a Canadian-based fund that's focused on prop tech or real estate investments. Based in Toronto, is their second fund. To be honest, I haven't heard much about them before. They are based here, and it's interesting. It's a non-tech backed company. So like Inovia is really in the tech ecosystem, and Greensoil is backed by large Canadian pension fund. Lots of investors are Canadian real estate players. So this is natural. I think Canada has a competitive edge in real estate, and it's great to see one of the first prop tech focused funds. They must have had success in raising a second one. They invest globally. I just thought it was more interesting, and there's a lot of prop tech companies out there, so that you should be knocking on their door.
And so what do these two raises mean for the TechTO community? Should we be excited about more capital flowing into the ecosystem? Should people be sending over their pitch decks after they've perfected them together with you, Alex?
Well, they should always be sending their pitch decks to us so we can help out. That's what we do. But I think more late stage capital should make it easier for Canadian companies to grow and become for the next round of Shopify's and Lightspeeds to get to a stage where they're sustainable and go public. So that's great. Having a prop tech expert taking advantage of Canadian knowledge in real estate excites me. I like to see Canadian companies go pitch them and get more Canadian money back into Canadian companies.
I love that. Alex, what a week in Canadian tech. If you haven't already, you got to like and subscribe wherever you're watching or listening. That helps the Canadian tech ecosystem grow and get discovered. We'll see you on the TechTO Inside.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be the next multi-billion-dollar idea.
So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.